So we've got this retest gap on AMD today, which just means that price is gapping above the close of the prior day. So based on that, AMD is going to be opening today about 53.52. And so that's actually just above yesterday's close of 52.43. Besides that, the other factors I like on this close-in view of the daily chart is that we've got this really awesome hammer from yesterday. I love hammer candles. They're a very natural part of sort of the retest structure of moving markets. And so I really enjoy trading a hammer, and taking a retest gap right above a hammer is a lot of fun. Also, if you look at the volume from yesterday, it just edges out the volume from the day before that, which is great. So not only do we have this hammer, but it's on an uptick in volume, and the lower shadow of that hammer is actually in a perfect position to essentially trap folks from 2 days prior, right? It just sneaks below those lows of the previous candles enough to sort of maybe generate a little bit of short interest, get folks going in short, and then in the same day it runs all the way back up and closes higher than it opened, and then today it's gapping above. I think that sentiment is all shaping up for a great sort of bullish bias on the day. So the only other thing I want to do while we're zoomed in at this level is just note the high of the previous day as well as the low of the previous day. I do that for pretty much every ticker that I trade. These are just good levels to have once you switch over to your intraday time frame. I'm not expecting the low of the previous day to be much of a factor, right? My hypothesis here is that this is a retest gap, meaning that we're going to open above the high of yesterday. We're going to pull back, retest a level. I'm expecting some level like the high or the close of yesterday, and then take off from there, right? So if we're down at the low of yesterday, then my hypothesis will probably be invalid and I shouldn't be in this. One other thing I'll note here on this view is around 54.18, we've got this point where price literally got up to yesterday and just rapidly turned around. And so anywhere that price action just does a complete flip, I just want to note that on the chart. I'm not saying I wouldn't take a trade or I'm considering that a target or anything. It's somewhere I want to be aware of while I am trading today. And so I just mark it here on the daily view, so it shows up for me when I switch over to my intraday timeframes. So now let's zoom out a little bit to see if there's any more context we can gather for this trade. On the big picture, we could start with the very simple, obvious stuff. If we go back to the March lows, we can draw this really great trend line up through the recent lows, again, confirming that the big picture trend since March is at least bullish, even though through the last few months you are seeing a bit of a consolidation and ranging. No big deal. This line in particular, helping me confirm the bullish trend, is not necessarily relevant for the trade, so I'm not going to keep it on there. It'll just be noise if I do. Other things that I look at, pretty standard items, are simple moving averages. So I've got the 100 period daily moving average in blue and the 200 period daily moving average in red. Immediately what I love about this is that the 100 period daily average, the blue line, seems to be a great area of support for AMD, especially over the past few months, ever since we came off the 200 back in March. I'm excited that the price action is above this, and so we're trading above both of the big moving averages on the daily time frame, but none of these are going to be critical for where we are today in our trade, so I'm not going to mark them to watch on the intraday time frame. They're pretty far away. Again, if we get down to 50.97 and down to 45.60, my hypothesis will not stand. So we'll also take a quick look at the exponential moving averages, or the EMAs. These are two pretty fast EMAs. This is the 10 and the 21. It's great that the hammer candle that we're looking at, retesting today is above those EMAs, but also in a ranging market like this, I'm not looking to overly rely on anything that EMAs are saying. But the other two things I want to point out, and these are apparent to me because I do watch AMD every day, right? And so I've been seeing these patterns emerge for some time now. But essentially, if you really wanted to be a little bit creative, you could draw this symmetrical triangle on AMD, which the reason this is great for the trade I'm seeking today, I'm expecting a bullish retest gap. My bias is long, and this symmetrical triangle here is telling me that our price action has been consolidating for weeks and months now, and we're in a very tight range, and so we should see some movement out of here at some point. And it's just another factor to add to my trade, to add to my hypothesis, right? I'm not saying like, oh my God, symmetrical triangle, I'm gonna take it, because if I would have done that, just a few days ago, I would have been wrong if I was like on a swing trade or something. But I do like that we are sort of consolidating and building pressure. I like pressure when I'm sort of expecting kind of a pop. The other thing I'll note is that we've got this pretty solid support and resistance channel going on. We've got these clear highs and lows within that channel. We go from high, low, high, low, high, low. And right now we're kind of in the middle of that range. And so we could easily go down or up, but assuming that my hypothesis is long and everything I'm seeing is telling me I want to take a bullish view on this day trade today, what I'm seeing in this channel is like I've got plenty of room to go. There's nothing in my way outside of maybe, that 54.18 price level that we looked at where action kind of turned around really quick 2 days ago or yesterday. But besides that, we've got room to the upside. So that's kind of like the importance of looking at this range. We are trading in range. If we break out of it today, that's okay. But like, I just don't see that happening. But I know I've got room for risk reward if I want to get in this trade. So all that said, I'm really digging all the factors that we've looked at so far. Let's jump over to our trading time frame. All right, so now we are in our trading time frame, which for today's trade is going to be the 3-minute, and I have extended hours on. If you don't know how to turn on extended hours and you're in trading view, it's at the bottom right. You can click the EXT button. So what I want to call out here in the pre-market for AMD is you can see how price in extended hours has been really chopping right above and below our high of day yesterday. And I think that's awesome, right? We're looking to take this very subtle bullish retest gap, and we've got price heavily flirting with that line from yesterday, which is such an important line, right? Because that's what I'm actually expecting to be retested today before we go bullish. I'm expecting we just get a little pullback into that high of day, and then we go. Besides that, the other thing I really like about the pre-market is that hammer candle that retests some of those intraday highs from yesterday, right? And then right after that, price kind of moves up in the pre-market, and we're going to open above where we closed yesterday. And so for me, actually, I'm going to take a pre-market setup on AMD today. I know this sounds crazy, but I follow AMD closely. I like AMD a lot. I love retest gaps. I love when they're subtle. I love following up on a hammer candle. I love the volume in AMD. I love what the pre-market is showing. I like where we've got room to go in the range that we showed on the daily chart. I love that we're above our moving averages. I'm essentially walking you through a checklist, and you should have checklists like this that you literally just go through and say like check, and know what things are contributing to your hypothesis, to your decision to get in. For me, everything says on this trade that I want to get in, and actually I'm going to be really aggressive and just do it off of this hammer that I see in the pre-market. So that being said, all I'll do is take an entry kind of right above all that action at say 53.57 with a pretty tight stop loss right below the hammer at 53.14, and we'll go ahead and size this for a 2-hour trade to start. I'm going to take 348 shares on this trade. The reason I'm doing that is because I risk $150 on most of my day trades. $150 happens to be just a little less than 0.5% of my account, and that's how much I'm willing to risk on a given trade. I don't want to lose 0.5%, but it is my maximum tolerance. To get that tolerance on a 43-cent stop loss, if you divide $150 by 43 cents, you're going to get 348 shares. That's how many shares I need to take on that risk for this trade. If it all works out and it hits my target, assuming nothing else happens, then I will get 2 Rs, 2 times my risk, which is $300, right? I do give myself a tiny bit of flexibility in terms of the number of shares. You see 348 shares here. If this was a ticker besides AMD, I would probably size this up to 350 or down to 300 more realistically, just to get what's called a round lot. A round lot means any order that is in increments of 100. If you're not in increments of 100, you have odd lots. I use Interactive Brokers to trade. Interactive Brokers in particular has some criteria for how they route odd lot orders. You will go to fewer exchanges, and you will be very low priority in those exchanges. If all of this sounds foreign to you, then just ignore it, skip forward a few seconds. It's completely pointless to focus on this early in your trading, but at some point it will start to frustrate you. And for example, on a recent trade on Boeing and Square in the same week, I got skipped on 2 fills that would have been winning trades. I was watching time and sales. There was so much execution below my stop price, below my limit price, and I didn't get in, and it's because I had odd lots on both of those orders. It really isn't a huge factor in my trading. I rarely get skipped on fills even when I have odd lots, but when it's a ticker that isn't sort of like this hyper liquid name, I will make sure I have these rounded lots to get better preference or priority when I'm getting my fills through my broker. Anyways, so we've got our trade set up. Like I said, it's a pretty aggressive trade, aggressive but informed. I've taken you through my exact thinking why I'm doing this trade. Let's play forward the 3-minute chart and kind of see what happens. So on the very first candle of the day, we open right below where I have my buy stop limit to get into this trade, right? And I'm entering this trade at a buy stop limit. And then after it opens, it goes down and retests the high of yesterday at 53.47, which is kind of what we were expecting to happen. We expected this to be a retest gap, meaning it's going to retest some meaningful level. This happens to be the high of day from yesterday. So we retested that level and then kind of ran up right through my stop, triggered me in, and now I'm sitting in this trade already profitable on the first candle. I'm pretty happy. Let's go see what happens next. Next candle comes in. This one's great. It's another bullish candle. It is putting in a bit of an upper shadow right at the pre-market high. This isn't unexpected, right? That should be a level that price action contends with for at least a moment. At this point though, you're sitting 20% of the way into your 2-hour target for the day. So this is a really good feeling 6 minutes into the market. It feels awesome. until the third candle comes in, and all that profitability you just had is now showing red for a second. And so you really got to just ask yourself, like, hey, is this still the trade I wanted to be in? Is my hypothesis still intact? And so what I'm looking at here on this third candle is like, yes, we've got this big, wide-ranging bearish candle, but the volume is dropping off, and we are putting a pretty big retest into the high of yesterday. And so I like the fact that it's retesting that. I expected that level to kind of be something significant that we retest and kind of springboard out of here on that basis. And so right now, everything still looks good to me. We didn't even close below the low of the opening candle, so I'm feeling good. And even if I wasn't, that's why we have stop losses in place. That's why we have predefined risk in place. Next candle comes in. This is great. Kind of recovered most of that ground that we just gave up in the previous candle. We are putting a bit of a topping tail at the high of the previous candle, so we're gonna have to make a decision here soon on that. Again, another retest at the high of day yesterday, so all this is good. We've got the bullish sentiment coming in. Let's see what happens next. A little bit of indecision coming in on this candle. Very, very narrow range, which is great. Volume is dropping off. I like this. When I see this, I actually fully expect to go higher now. Even though it's a black candle, it is bearish, and it's got tails on both ends. I don't think that's a big deal. Look where it's coming in. It's right at the high of the pre-market. So this next candle comes in, massive range, massive volume, taking out the pre-market high, all the highs from the previous candles. This is an awesome candle, right? And at this point, I'm actually going to look to take some profit off the table at around 54.02 by taking a little bit of shares off here. Even if the trade went completely against me, now my risk is not 150 anymore. It's lower than that. So here I'm going to attempt to take 48 shares off the table at 54.02. So we got in with 348, and my goal is to kind of be at 300 as we go forward here. And we're also kind of approaching that 54.18 level. So let me lock in some of the gains and reduce my risk. Next candle comes in, awesome candle. You know how I feel about hammer candles. They're just such a great natural part of price action. They kind of indicate retesting after we're making some highs. This one's awesome. It's retesting the pre-market high perfectly. And then we're also making our own new high, and we put that little upper shadow right into the 54.18 level. And just as a reminder, that 54.18 is the high from 2 days ago where we saw price just kind of stop and reverse. So I'm expecting that we maybe just hiccup there, but I don't see that being a stopping point for our trade. But if it is, I got some profits off the table, and I'll be able to manage this trade pretty easily now that I'm in a position of leverage. Let's go on to the next candle and see what happens. So that hiccup wasn't long-lived, and now we're past that, and we already set a new high. We closed above that. There's very little in the way of this trade, right? So the way I'll manage that is to take a little bit more profit off the table. I'm going to shoot to take off about half my shares at around 54.40, and then I will move my target up. I think this trade has legs, but I'm going to take a big part of my position off, lock in a bunch of profits at what my original target was or near it. And then once I hit that, I'll also move the stop up. So no matter what happens after this next partial exit, I can't lose on the day. So let's kind of click through and see what happens next. That was a great call. Got out some shares at 54.40. We're super close to the next target. This is looking pretty extended now, and so are the Qs. So I will just leave my target as is. I do think this trade has insane potential. Look at the volume kind of holding steady throughout this bullish move, but I'm very comfortable approaching 2+ Rs for the day. And so the next candle comes in, and that's it. It's a wrap. I'm out. I've hit my target. According to this now, this is a 2.3 R target. I'm not going to get 2.3 Rs because I've been taking shares off the table at various points throughout, so I'll get something less than that. So taking a look at the P&L now, there's a couple things to call out here. You're going to see a ton of ins and outs for AMD, and I'll kind of explain what happened here and kind of bring up another point that's important with trading, especially if you're kind of just getting started. When I tried to take some profit off the table at 54.02, I actually ended up buying more shares. I hit the wrong button. It's super easy to do, but it's a mistake nonetheless. So I really meant to sell 48 shares and bring my lot down to 300. Instead, I added 48, and now it's sitting at 396. As soon as I realized my error, I quickly focused my attention on how do I correct this and make sure I'm not exposing myself to more risk than I want in this trade. So I immediately then sold 96 shares. I did that to get rid of the 48 I just bought and the 48 I originally wanted to get out of. When you make a mistake and you're kind of live in a trade, especially if it's moving fast and you've got profits on the table and real money at risk, I would encourage that the first thing you do is focus on your risk management. Try not to panic and just focus on, hey, what is my risk exposure right now as a result of this, and how do I undo that? You just want to get back to your risk level before you do anything else. Anyways, I sold 96 shares to get out of that mistake I made and kind of get me down to that 300 size lot that I wanted to be at. Another point worth making here is that my day trade tax lot settings are first in, first out. So by selling 96 shares, I didn't actually sell the 48 that I had just bought. I sold 96 of my original. I'm just saying that because it's a consideration to keep in mind. you can change lot settings for how your trades are executed, but just want to kind of point that out in case you weren't too familiar with first in, first out settings. So now let's get back to this trade, and I'm just going to let this play out for a little bit so you can see how much money I left on the table. With AMD, this ended up running pretty high for the day. I had no way of knowing, because once the Q started turning around, I don't think I would have, had the guts to stay in this trade. And so it runs higher. I probably could have got 4 or 5 times my risk on this, but that's just not my appetite, and it's not what my trading strategy dictates. Anyways, we'll let this kind of run through while I sum up what we just did. So I went through my morning routine and found a ticker that I want to trade for the day. It was showing me a retest gap, so I went in to establish my bias on that gap and my hypothesis for how I could take that trade. I used the daily chart to define some important levels for the intraday time frame, and then I went and looked at the pre-market info to kind of see how that was setting up. What other information could I glean from pre-market to help me make a decision on sort of how aggressive I was going to be with this. And obviously, as you saw, we ended up taking a pre-market entry on this. Quite aggressive, as informed as I could be, but I felt really good about it, again, because I watch AMD daily. And then I want to emphasize the importance of kind of staying focused. I made a mistake while I was in this trade. I knew I made the mistake when I was doing this live, and my immediate focus was just on making sure my risk exposure was intact. I'll kind of summarize everything by saying that your success in day trading is all going to come down to risk management. You are going to make money on your day trade. You're watching videos right now, you're learning, you're going to make money. It's not that hard to make money. It's really hard to be profitable, though, on a consistent basis. You will have winning trades, but your profitability in the long term is going to be determined by what you don't lose. That's all really just risk management. Thanks so much for watching. I hope you enjoyed the video. If you have any questions, hit me up, email, message me, wherever. I'd love to chat about this at any time. Until next time, stay profitable.